My name is Erin Swenlin from decisionpoint.com, and I'm here to tell you about one of the top influential market events. I decided when I was asked what to pick for this end of year special, what it was that I thought was one of the top 10 influential market events. Well, it was pretty easy to me to pick USO and oil, West Texas crude. Basically, it had been decimated in 2020 due to supply and demand issues. And now we're starting to see it has returned from the dead and has moved up. But believe it or not, when I look at that weekly chart that I'm going to show you, I think there is still room to run for oil at this point. There was also that crazy run up in natural gas, and a lot of this was supply and demand. European demand had moved up. We were seeing supplies limited, and there we go. That's going to bring natural gas moving quickly higher, which is exactly what it did. And on the weekly chart that I'm going to show you, we had a parabolic breakdown on natural gas. For those of you familiar with my work, Carl and I often talk about parabolic chart patterns and how they typically break down. Well, I have to tell you that weekly chart for natural gas is a textbook version of a parabolic breakdown. So I'll be showing you that. And then also I wanted to move to the daily chart just because there really were some warning signs as we went in to that top and started to see natural gas pulling back. It was a little bit rocky, as you'll see, but there were warning signs as we went along. So let's get ourselves started here with the crude oil chart. And I know I was supposed to only pick one chart, but I had to cover natural gas in addition to oil. They're kind of tied together. So I kind of have three charts that I'm going to be talking about today. So first off is USO, and this is a weekly chart that you are looking at right now with the RSI, my price momentum oscillator, the PMO, and underneath is West Texas crude so that you can see what the price per barrel was as we moved out of 2020 and into 2021. So as you can see, we had a big move to the upside out of that bear market low for West Texas crude. We were actually at, if you recall, $10 a barrel. We were actually seeing people having to pay to get rid of, they were paying people to get rid of the oil. They had so much, quite a glut at that point, mainly because demand really just diminished so very quickly with the COVID crisis. And after that bear market, we started to see the move out of those lows. It still really did take USO and West Texas crude a long time, mostly the year plus, to get up to that $85 per barrel range that we're looking at right now. So when I look at these charts, I was saying that there is room to run. There absolutely is. It's hard to imagine and remember in 2015, we did have USO up in the 150s, 180s, and it did pull back to the $60 level. But that was really the baseline for year after year. And it didn't even come down and test this until we had the big gap down on that waterfall decline from the COVID crisis. And of course, it continued much, much lower, as I pointed out, to such a low price point for those barrels of oil. It was costing more to get the oil out there. So very interesting turn of events, certainly in 2020, but it carried through into 2021. And you can see that price really was right around that $32 range, and it has pushed itself up. It made it to that $60 level or gap resistance, and then it began to pull back. It is holding this this EMA that I have here, the 43-week EMA. It is still holding on top of that. And we are looking at possibly a bit of a breakdown in the making here. However, I don't really think that's what we're going to see. But I just wanted to point out the fact, when you look at this long-term chart, the high that we experienced this fall really was just the bottom of the range that we were experiencing for years before COVID. and you had the gap resistance and it held. But at this point, I still think we will see a breakout in USO, in oil. Supply and demand issues are probably going to be in effect once again. And we've been pulling back on the thought that demand was going to go away for oil, but it turns out even with the variant, a lot of people are still out there using oil and gas. In fact, everybody is complaining that gasoline is so expensive at the pump. Well, I have to tell you, we could certainly see higher prices, at least as far as oil goes. So this, I think, was one of the most influential events in 2021, seeing oil come out of the doldrums from 2020 and really start to make that break above $30 and continuing up and doubling up to $60. So let's talk natural gas, because this chart is just crazy to me, and certainly one of the top 10 charts, if you will, for the year of 2021. So here we have natural gas, and I cover it using UNG as the trading vehicle. Now notice in 2021, how could this not be one of the top 10 influential events? Look at this parabolic rise that we got on UNG. It continued higher. It started to really pick up speed and went almost vertical here up into this top. This from 2021, the end of 2020, to the top that we saw in October for UNG, that was 166% gain from that low to that high. And since then, we've had a huge pullback. This is that parabolic breakdown I was talking about. When parabolic prices break on a parabolic, you're going to see a very swift and very painful decline. So you should always be protecting yourself if you end up in a stock or ETF that is on a parabolic advance. You don't want to hop out too soon. So I usually protect myself with a trailing stop when I get into what I call a runner, one that is going up almost vertically. I want to take advantage of as much upside as I possibly can. My stop will go up with me. And when you get that big breakdown, you're still going to take a hit, but you certainly are not going to get caught up in the frenzy that usually happens after a parabolic breakdown. You can see that we did have the weekly PMO had turned down, but it did take some time before we saw that trigger to the downside on the weekly PMO. I do want to point out that the RSI was very, very overbought for quite some time. You can see where this happened before in 2018 with that big parabolic move to the upside. Look at that parabola there. You can see that move all the way up and then that very painful decline that followed it, but it also came on very, very overbought conditions on that RSI. So those were some of the things that I noticed on the weekly chart for UNG. The other chart I really wanted to show you was the daily chart, and it covers all of 2021 pretty much. We still have a little bit left here in December to go through, but I wanted to point out some of the warning signs, as well as some of the factors that really gave us a hint that we were getting ready to make a nice move to the upside on UNG. You know, through here, it was kind of some fits and starts. We stayed in that $9 to $10, $11 range for quite some time. It wasn't until June when we really saw that big breakout over at this level of overhead resistance. And you can see that stochastics at that time were in a positive situation here with the way they were oscillating above 80. And then they continued to oscillate in positive territory. Now, where were some warning signs when we did have some of these tops? So you'll notice I put in red vertical lines the tops for UNG, the cardinal tops is what we call them. And then in green, I've put the bottoms that we saw on UNG, just to give us some context when we go down here and start looking at the indicators. It makes it a lot easier to see when you get divergences and those various movements in those indicators. It's nice to be able to match them up to a top or a bottom. So really, we had this move. You can see back here when we hit that top, we really didn't have much in the way of warning on that particular one. The PMO was still rising. The only warning sign really was the fact that the RSI had gotten very, very overbought. But stochastics were still looking good, and you can see moving in that it was outperforming the S&P by quite a bit. So this decline, not a whole lot we could have done with that if you were still in it, but we did see that the 20-day EMA was able to hold, and we got a nice bounce off of that. You can see that the bounce to the upside, we had a little bit of understanding that it was on the way, as stochastics were just starting to turn back up here on those first two rally days. And you can also see that PMO started to make its turn back up. But the question is, where were we at this top? Where were we at this top? What was giving us a warning sign that we would see this pullback that was very painful and has continued? It looks right now like we are at a pretty good support level. So we'll be watching UNG very closely to see what might be happening going into the end of the year and into the rest of the winter. We'll have to see if those supply and demand issues become an issue again. So you can see at these tops right here, we didn't have that much warning on this top, but we did make the pullback and we started back up. And at that point, notice that was when we started moving down. That's when we got that sell signal, a crossover sell signal on that PMO. And we kind of did back here, but it really made that immediate whipsaw. In this case, the PMO sell signal came in and it continued to put margin between it and its signal line. That was quite the warning. Now, if you hadn't gotten out here, and of course, if you had, you probably would have been, smacking your head and going, what? I missed out on this other move to the upside here by getting out. Certainly that's true. But when you got to this point, now it was time to evaluate. Were our indicators getting any better? What was going on? And you can see that through this move to the upside, the stochastics were rising nicely. PMO was still acting up. It's still, we got a little bit of a turn on it, but that was it. The main thing was this reverse divergence. Very bearish. And a lot of people wonder, well, what's a reverse divergence? This is the on-balance volume. And so what you're seeing here is an increase in the highs on the OBV, but you're not getting the same reaction on price. This is telling you that more volume was being pumped in through this period, and yet we didn't see UNG get above that previous high. So that was really the key warning sign at that point, was that reverse divergence that was going on there. And you can see the PMO came up here and started to turn down below its signal line, another warning sign. So there were certainly plenty of things to tell us this was a problem. It looks like it's hitting some interesting support here, but the indicators are not really confirming it as an actual bottom. So that was my top influential market event, and that would be crude oil and natural gas and the run up on both. I hope you enjoyed this, and thanks so much for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.